attendees to hear you. This system will notify you once you begin your broadcast.
All right, good evening, everybody. This is Ken at Tortoise Capital. It is October 12th, 2019. We just finished the second day of the October boot camp out here, which is that small group focused effort for applied knowledge. It turns out these four folks wanted to work mostly on swing trading and acquiring the new skills. And so that's really been the focus of our attention. As part of them coming to this base camp, I decided that I'm going to give them the annual coaching program for the courage that they displayed in coming out here and the courtesy that they've been showing me with my ramblings all week. So they're going to start as a small group working on advanced swing trading home study, and then using the coaching project for 2020 that starts on 1 November to do some collaborative learning together on a weekly basis, and then do monthly check-ins with me as a way to kind of lock in the learning in an applied way with an accountability group with monthly check-ins to take a look at performance characteristics and all of that jazz. So we'll be using Basecamp to do that. There's probably another half a dozen other folks that are also going to do this. So it looks like a pretty robust group doing the annual coaching. And I think there will be a emphasis on the swing trading. That's part of this year's theme anyway, but that seems to be the biggest area of interest for most people. And I also think that's sensible, since swing trading allows us to give information and actionable ideas to the higher time frame for monthly rebalancing, but also to the day trading to act as core and turbo in both directions, if you will. And plus it lines up with an efficient use of time for professionals that are looking to do some additional work in the evenings and whatnot. So swing trading seems to me to be the optimal way to approach the enterprise of trading in a way that has the biggest payoff. And since the strategies and the indicators and the sense-making frameworks that I use are fractal in nature, there's really just one core set of knowledge and patterns and interpretations which are simply applied in the different time scales in a robust way. And so there's a real efficiency in adapting the 4 seasons of the MACD histogram and the RLCO framework and pinch and stretch and support and resistance. Those things all work in multiple time frames. You learn one way of trading and managing, and then you just tailor it to the time frame that's of interest or most utility for you. So that, by way of background, is leads me to tonight's topic, which was, to me, a perfect illustration of the core and turbo approach between intraday and swing trading, which started with last weekend's report. And just to kind of quickly summarize that, looking at the excuse me, the market health check from last Friday, and what I want you to notice is the ooh, that's nice. Let's see if I can. So the first thing I look at is down here in the winter in the MACD histogram, that the market had just gone. Let's see if I can make this work. There we go. It had gone from a period of winter, then it turned to the spring here in the yellow, and then climbed the wall of worry up into the summertime when we could officially get long here, but we actually were long inside this range. And then we enjoyed the summer, and then the fall came along with plenty of time to protect you against this harsh sell-off. And then these 2 days were miserable on the Monday and Tuesday of that week. I'm sorry, that was Tuesday and Wednesday. And that took a market which had looked pretty good at around 296 all the way down to 287 in 2 days. And then had an open, a bottoming tail, and then a rocket move the rest of the day. And this was a great day for intraday trading in the chat room, as we saw. And that led to some swing trading opportunities on the Friday, and it closed very, very well. So here was a market that had all of the elements of manic depression in full force. You know, the daily range ended right in the middle of the 10-day range, which is the orange box. And it was right in the middle of the 30-day range, which is the yellow box, all the way to the current state. So it had closed right in the middle, had two powerful directional days in a row up, preceded by two powerful directional days down. And so that was like the peak of manic depression. It went from a z-score of +1 to -2, and then back to the zero state in a matter of 3 days. So that's like 3 or 4 sigma move in rapid fire succession. And that was a psychological bruise. And then people were willing to hold that over the weekend and closed really well. So that put the market in a perfect critical state right in the middle of a trading range that was pushing near all-time highs up here at the top. So if it gets above 303, it's free and clear. There's no resistance overhead. But at the same time, it had come down and tested the previous support level at 287. And if that fails, then the 200 period moving average at 284 was in reach. And then that's the gateway to further disaster. So the market stared at enthusiasm and panic all within a matter of a couple of days, and then closed right in the middle of those trading ranges. At the same time, the MACD histogram had gone from the fall and had just entered the winter, so we were allowed to have a short side bias for the week ahead because of that crossing that zero line, which is crucial. You can see that we then framed out all of the support and resistance levels in the red lines and green lines, and it was their equal probability could go in either direction. And the market was right in the middle of the dragon, so it's right in the middle of the tactical time frame, and it's very close to the RL270, which is the long-term fair value. So you had a market that was perfectly poised in a perfect state for a large move in either direction in shorter than average period of time without a directional bias, really, in terms of short-term trading. So that's a time in which you wouldn't really want to start swing trades, but at the same time, the critical state on the swing trade time frame means that the intraday trade could be especially good. So we went through the list of usual suspects and framed out a series of trades from broad indexes to individual countries, all the frog champions, and then a few pattern trades that looked pretty good. And the energy sector at the time had reached a critical state at the bottom of the channel and was poised to make a sharp move again in either direction. So we had reasons to be interested in the broad market as well as in the energy sector itself. So that set the conditions for hybrid frog trading right from the opening on Tuesday. So that's what I want to say as far as how we use the weekend reports and swing trading to set up some turbo trading opportunities intraday on Monday morning. So I got everybody on mute. So if you have any questions that you want to ask along the way, just go ahead and drop them in the chat box, and I'll do my best to remember to go check them out. Okay. All right. So the market opened. And let me find our next chart on that one, if I may. SP1. Here we go. Excuse me. So the first thing that I do is always monitor the S&P. So this, let me get this open a little wider. Yeah. So we're on 1 minute charts here, and let me get the, where's my indicator? So this gray line right here, this is the close at 4 p.m. on the from the 4th, and now it opens at 8:30 local time here on October 7th. So you notice it closed here on the dotted red line and then opened on the dotted blue line. So there was a gap from 294 down to 293. That wasn't large enough to be a significant gap, but it was clearly a directional move. And then we let it unfold on for the first 5 minutes or so. And what we had was an effort to revert back to the close on Friday, and then after 3 minutes up, it couldn't get any further and started to fail. It came back to the VWAP, and then on the basis of bad news over the weekend and broad market sell-offs in every measured sector and country and index, and a rising VIX, we said now's the time that this could be the short side trade because of the MACD histogram in the winter that we identified on Friday. So I got short here on it as it crossed the VWAP, put my initial risk stop here, the execution risk, at the high of the day. So we had basically a 20-cent execution risk, and then in 1, 2, 3 minutes, it had moved 50 cents in our favor. So 50-cent capture on a 20-cent execution risk. I felt like I was pretty well started. So I just went ahead and moved the stop down and locked in that particular gain. So I like to start the day with goodness. And then I noticed down here that the MACD histogram intraday had also collapsed and went into the winter. So this was everything looking good so far. So that's the initial position on SPY. So far, so good. Okay, next up. Got to find all my charts here. Please bear with me. What's this one? Well, wrong direction, sorry. There we go. All right, so while that was happening, the energy sector had also gapped down. And so whatever the energy sector is moving and oil is selling off, my go-to position is Devon Energy, a U.S. mid-cap energy producer, which acts very much like a leveraged play on oil. And so this one, I want you to notice that the Friday fair value, the VWAP, had closed at 2240, even though it had a slight pop up at 2260 where it closed. So it ended up gapping up slightly higher than the VWAP and then instantly sold off, went through the VWAP, and you could see the VWAP coming down. So on the basis of a move from 2260 from the high of the day, it moved 35 cents in the other direction and was closing poorly. So I just got short at 22.25 with a 15-cent initial risk at just above the closing VWAP of Friday. And then it sold off 1, 2, 3, 4 in a row. And I was just trailing the stop with this black line you'll notice here, which was the middle of the spine of the dragon. After this doji, it didn't revert and started to fail again. So I just put a second position on with markets money and then moved the stop down further. And then it sold off again for another 5 or 6 minutes and then began to collapse once more. So I want you to notice that when we're tracking the RL10, it had actually bottomed up, crossed the baby dragon here at which is the 4-period moving average of the 10. That's an RL4 essentially. And then started to collapse again. This looks like a collapsing dragon to me, so I just put the third position on with markets money and then quickly adjusted the stop down here to about 21.80. And so now I've got 3 scoops on. The first position has 45 cents in hand from a 15-cent initial risk. And then the second position is deep in the money also, and it's just starting to run away, and we're only 15 minutes into the day, and the energy sector is leading the way lower, and things are feeling good. Meanwhile, the S&P is still getting lower, but energy is worse, and Devon Energy was a big underperformer. So those were the three positions. I locked in this position here. Now, what happened in this one was a 1, 2, 3, and now we got the second leg down, but it really didn't run away. There were a bunch of little dojis in a row, and even on the effort to make it collapse was responded to with 2 white candles in a row, and I just decided, that's enough. I'm going to strike and lock in the gains on the third position and exit at 21.66. So we captured from 22.35 to 21.66, and that's 70 cents on a 15-cent initial risk. So that's almost 5-to-1 execution risk capture, plus another, looks like about 30 cents on the second position and probably 10 cents on the third position. So that's about a total capture of about $1.10 on 15-cent risks. So that's somewhere in the neighborhood of 6 execution risks. So it's a pretty good day at work. And now, with 2 legs down and starting to stabilize, and now we have the RL10 crossing the RL30, pretty soon we're thinking about an owl move here and maybe a reversion back to Friday's close. But really, what I notice here is that the VWAP is really close. So I don't think there's a lot of upside room to that. So I'm not really excited about the opportunity there. So meanwhile, this is the S&P move. So while we were getting those 3 scoops into Devon Energy, and you can see the second leg down in the S&P, we ended up covering the S&P short at about the same place where we covered the Devon Energy short. But we only got 1 scoop in here, but that's because it was not such a runaway move. So we're basically short from 50.40, and we captured about 30 cents on about a 20-cent initial risk, I think we said, or actually about, maybe 20 cents initial risk. Then by this time, what we have is an unambiguous move down. We have an RLCO outside the river, so that's a P1. We have the dragon starting to roll up. We have the 30 starting to roll up. It's off the chart here, but you can't really see that. So this really becomes an owl position. And after a couple more minutes, we've got a reversion back to the VWAP. And at the moment of the owl entry, excuse me, I'm looking at some possible price targets to the upside with the purple dots here of the 200 period moving average, the Bollinger Band mean, which is more important, the RL90, which is the RL30 on the next higher time frame, and the RL10 on the 10-minute chart. So that looks like some intermediate fair value. And then the RL270, which is the long-term fair value, and then a return to Friday's close. So those were 3 possible targets to the upside. And so the owl has the potential to go from 50.15 positive 70 cents to 50.85 without being irrational. And then an entry here at about 50.15 that uses the belly of the dragon at 50.10 is a 5-cent execution risk, or if you use the bottom of the RL10, it's a 10-cent execution risk, or if you just go ahead and use the PSAR bottom here, that's about a maybe 25-cent risk. And even if you use that wide PSAR risk, it's still 3 times that to get back to close the gap. So that felt like a reasonable reward to risk ratio. And by the time I've got 2 bars in my favor, I should be able to get my risk from wherever I decided to place it to just above my entry point. So now I've got no lose plus dinner for 2, and now I can treat this as a science project now that my psychology has improved. To complete the thought on Devon Energy, this is how that rascal unfolds over longer periods of time over the first hour. So those were the 3 scoops in Devon Energy on the way down, covered. Then the owl entry, it failed to fail further, and then I like the fact that at this moment it continued. So you'll notice that there was a winter into a spring at the start of the Red River. It made it all the way through the spring. And right here, when it didn't fail further, we were already into the summer, and then the summer never failed back into winter. So now as it started to move out and cross the VWAP, that was a second position. And now I felt like we had a low and a higher low, and the PSAR was still supporting. And so we got, I think, a second leg up. And when it got back to the fair value, and now we're an hour into the position, I've got the long from 2170 and 2190, and I can exit at 2210. So that's a capture of about 60 cents on an initial risk of anywhere from 5 to 20 cents. So pick your execution risk. So that felt like I was able to stay pretty well tuned in an orderly flow in Devon Energy. And now the energy sector, which had started off harshly, ended up never collapsing further, and it was just kind of a gap down. They processed the order open book, and then it was kind of back to long-term fair value. And then meanwhile, the S&P looked like this. So this was the initial trade down, and then the cover, and then the owl. Then I took the recrossing of the VWAP for this exit. So we were short, and then we were long. We got a little taste. Because the rest of the market was doing pretty well, and even energy, which had led the way down, was beginning to be all right, I was reluctant to take this trade, but I did just because of reasons, because we were entering the winter on MACD on the daily, and it had already given one good leg down, and it had rolled over after only a half retracement up the top. So I went ahead and got short. So this is a stop and reverse. I'm essentially getting a pocket. I'm front running the RLXD, but if you waited for the RLXD to happen, you got short, 5 cents later, I'm not offended by that. So this one never really failed further. It didn't go down and test the previous swing low, but it basically ended up scratching as it came back to the VWAP. The VWAP. And then I took that as an RLXD entry because it looked to me now like we had a higher low. And so if we take this as a successful owl, this is really a pocket re-entry. And this gave a move all the way back to the RL 270, which is the long-term fair value. I had some belief in the markets, and so I stayed longer than I might otherwise have done. But I finally had to take the RLXD exit. There were a number of long tails in here where there was, inside these bars, there were efforts to try to get back to the 270, and it wasn't failing. So I just kept staying with it as long as there was some buying pressure. But by this time, the dragon came along almost like a time stop. So if you didn't get out here on the RLXD, then the PSAR and the 200 period moving average should have gotten you out. And I want you to notice that the S&P is in this yellow shaded area. That means it was inside Friday's trading range. So this is all yellow zone trading, where I'm trading between the high and the low of the Friday move. And so this is a really intraday tactical. And so now what we've got is this market that had a grinding summer and is now getting ready to drift into the fall. And now we're an hour in, and there was no real follow through. So that just felt like an ordinary, orderly piece. Take my fractional gains and call that the trade. Let me see if we have if there's any more in that series. I think there probably was. Yeah. So now we're going to shoot back to the S&P. So this is later in the day. So everything to the left of this box was the S&P trade that we just described. Where's my mouse? There he is. So this was the collapse down, the owl, then the pocket, and then the cash. Now, the market was still in the summer, and so this looked like the second pocket entry. So we went ahead and re-entered with a stop just below the belly of the 10. I would not be offended if you got out here for a scratch, because the rest of the market was working okay, and I was still above the VWAP. I held my guns, and it worked out okay. But if you exited here, you then have to re-enter when it crosses above the 270, which is now sloping up. So if you scratch this, you're getting these two positions and then cashing the RLXD. Notice how the PSAR supported your move all the way up, all the way from the PSAR flip down here. And then the RL or the VWAP is working the whole way, and you never went below the zero line, so you always had a long side bias, which is why I don't take this exit and why I don't go short there, because of the guiding principle of the MACD histogram. By this time, though, it felt like it was summer and into the fall, and the grinding nature and the rejection of the previous Friday close, I went ahead and tried this as a stop and reverse. That scratched, and then I stopped and reversed because it was it rejected the zero line and was going up into this summer again. So I went ahead with an entry here at 50.90 with a 15-cent stop. When it made its move to a new high of the day and then started to collapse, I just said, let me move and lock in a break-even trade, and then let's just see what happens. Then what happened later that day was this was the big box. So now I'm looking at SPXL, which is the triple leveraged S&P, but it's really the same deal. That trade ended up holding and giving me an exit up in here. By this time, what I noticed was the amount of stretch from the RL10 all the way back to the VWAP. So that looks like a VWAP excursion of a certain magnitude. The size of that move was also the size of this move. Because the market was choppy and it was in lunchtime, I noticed these yellow dots. Under different circumstances, I might be taking those as shorts because the market had rejected the summer and the fall and was now dipping into the winter. I would not be offended if you took any of those. By this time, when it came all the way back to the VWAP, which is the least surprising move of all, that just means that I missed that entire move. Happens all the time. So now it finds support of the VWAP and starts to move out again. It moves from the winter to the spring and into the summer. So I tried this one and it worked. It cleared this resistance, got through the RL 270. It cleared the humps of the dragon here, so that looks to me like an emerging dragon. Went ahead, took my second position. It had a nice excursion, then started to fail, and it felt pretty good on 2 scoops on a tactical day. So I just took that one on 2 scoops and cashed. I tried this one. It failed. Then it broke through the 270. I went short, and it came all this time I was going to try to get the VWAP. It did. And then as it collapsed through the VWAP, I took the second position. And then as I'm stalking this thing to the downside, I said, how far below the VWAP could it go? I'd take one of these boxes, which is the distance on the upside of the stretch of the 10 to the VWAP, and just project it down. And I said, it could get this far all the way back down to 50.10. And if it did, I'm not allowed to be surprised because that's already the low of the day. It was just there today. So in the last hour or so of the day, and I get 2 scoops in with momentum, and I've made money with markets money in here. I feel like this is a low risk trade, and it starts to collapse. And now at this moment, as it's collapsed here, it's either going to be a great payoff or it's going to just muck around and I'm going to exit. So I ended up exiting somewhere between the second red dot and the first purple dot, and got a fill around 50.48 because I was running out of time during the day. But I had projected from this moment that it could get down to these price levels in the rest of the day. So by the time we were done with the day's trade, what we had was this kind of a day. If you recall, let's try to zoom in on that a little bit and see what one day's new information looks like. You will recall from the opening remarks that we had that manic depressive week last week. We had 2 sharp moves down, 2 sharp moves up, and then the Monday opened here. It was an inside day and nothing happened. There was no big follow through. But what I want you to imagine what it did was it opened here, went as high as here, and then came all the way back and gave us a tiny little doji. That was kind of a rejection of the upside enthusiasm from the close at the last week. So this was actually a market that had tried to continue and then failed all the way back to the opening and then closed poorly. And now we have a market that is, if it opens on Tuesday and breaks through the low of the day, I'm short. I would get short if it broke through the close on Friday, and then I'd be expecting a Z2 a Z, and then back to the 200-day moving average. That's the downside price action, and then all the way back to Z3 and the VWAP down here. But conversely, if it opens inside this range on that Tuesday and takes out the high, I could be long and then adding positions to the, when it breaks through the 270, above the 90, above the 10-day high, which is that orange box, and then above the hump of the dragon, and then all the way up to the all-time high in the vicinity around 302, and the peak of the RL10, and then finally the VWAP reversal up around 302.71. So again, we were looking at a Tuesday that could be excellent on the same kind of trading frame and the same kind of larger strategic context, which set up our intraday trading. Now, there was no big follow through, but if we go through and total up those wins from the energy and from the ES, it turns out to be a pretty good day at work. And that's on some intraday tactical trading when there was no big follow through. I want you to now imagine those positions that had 2 and 3 positions in hand. And if the market had followed through in a big way, that could have been a runaway excellent day. Like, it could have been 15 or 20 R if the energy position had really crashed with 3 entries in the money and a runaway downside move. So we were postured to be large if we were winning, or small if we were losing. So managed risk, exposed to the possibility of a big move to the upside. I felt like we had managed the risk and found that how to be in tune with the market pretty well. So I was pretty happy with that. So that's what I wanted to highlight. I just felt like that was a really good illustration of the connection between swing trading and framing, and then using that to help inform the intraday or turbo trading, and then how we use the hybrid frog to get into positions early with small execution risks, get our risk out of the market, start locking in gains, and then just use the sense-making framework of the Dragon and the RLCOs and the MACD histogram to give us a sense of how the day is unfolding. So that's what I wanted to talk about, and I'm open to your questions for a few minutes. I can stick around for a couple minutes, but we got to get ready for tomorrow. That is day 3 of the boot camp, and I got some prep work to do. So what I would propose to do is I will get this recorded and produced, and then placed on the YouTube channel and on the Patreon webpage. And I would just tell you guys that if you're interested in the daily reports and these little quizzes, but you don't feel like it makes sense to do the the longer term subscriptions for the home study courses and all that, the Patreon account at patreon.com /Ken Long gives you a bunch of different ways in which you could support the dashboard and receive the reports in a very low cost and reliable way, and I think would be a reasonable approach to stay connected to the material in a cost-effective way. So consider that if you're within the sound of my voice, and we'd appreciate the support. And everything, of course, goes to help the team and the community practice. So thanks very much for your kind attention. If you have any questions, please send them to me at longke@yahoo.com with the title of something like webinar questions. And I'll put those into an FAQ and then record a follow-up question and answer session. And then I'll probably do another one of these, next Friday, because there were some lessons learned that we're about to have this week because of the market being in a critical state. There's some videos on the trade frames that we were working on in the boot camp, and a really good video on the multi-time frame, multi-lens analysis using the current state of the market health check. So if you're interested in that style of trading at all, I think those are very high payoff. All of that's posted at Patreon already, along with the weekend reports. So the information is there ready to be acted on if you're so inclined. So thanks for your kind attention, guys. Have a good, safe rest of the weekend, and we will see you on downrange and in the chat room, and in the future. So take good care, and we'll see you. Thanks, Martin. Take good care, buddy. Hey, Martin, let me ask you, how is the Patreon working for you as far as like delivery and manageability and accessibility? Is that feeling okay? It feels pretty good for me. I actually think I'm getting more content produced because the administration of the site is pretty easy, and it frees me of a lot of trivial work about managing mailing lists and all that stuff, and it gets me out of the management business and back into the creation business. So that's kind of how it felt to me already. I already feel like it's a pretty good idea. I wish I'd done it 10 years ago. But yeah. So okay, hey, thanks for the insight there. And hey, while I got us here, if you're still around, I was going to talk about this, and I just remembered. This was pretty cool. So this is I don't know if you ever met Jerome, but where is his thing? Oh yeah. So while we're here, let me just cover this. This was pretty cool. So Jerome is doing the home study course on day trading and swing trading, and is taking the coaching project seriously. So he just went ahead and got started. He's not waiting for 1 November. And so he sent me this like a monthly check-in. And this is kind of the monthly check-in format that we're going to use to get it done. And he showed me how he had been adapting the TC2000 to do some signaling that helped support his decision making. And he provided the usual markup with the trade sequence plot. This is the scatter plot of R multiples. This was the 30-day rolling average R's, the cumulative R gains, the histogram of results, the statistics of his win rates and loss rates, and then his narrative of his self-assessment. So he said, so he's been a swing trader his whole life and is just starting to dabble in the day trading. He's basically self-taught, having used just the home study course himself, by himself, and worked through the lessons and just put it right into practice. He's kind of fearless in that way. And so he's still working on his consistency. He had some initial successes in week 1, and then he got a little wild. And then he was having some learning curve challenges with the swing bias and the daily bias, so he had to learn how to accommodate and incorporate both of those time frames. And then he was mixing rule sets between swing trading and intraday rules. And then once he got those adjusted, he then started changing that performance right in here, and you can see what the average rolling R and then the R capture was going to be. This is really just a couple weeks to sort it out and get it refined and start working. And then he started using some money management and using his results in the 4-bullet rule to get himself well started. If you can't get that alignment early, he just says, that's enough. Let me try it when I'm better suited. So instead of getting -4 R days when he's not aligned, he's able to trim that in a quarter or a half to smaller losses. And then on the days when it's working, it's easy and it just flows. So he's still working on things with daily prep and finding targets and all that. But that's the first month of putting in new systems into practice. And so my thought experiment to you guys would be, if you receive that kind of feedback, or if you had produced those kinds of numbers, what kind of insight would you come up with? I would look at things like 151 trades in a month. The best winner was 4 3/4. The worst loser was -2. He scratched a couple, and 79 losses, 70 wins. So a win rate of 0.46, average win of 0.77 to average loss of -0.4, standard deviation of 0.91. So his SQN is 1.9, NSQN 1.56. And so the first month of live trading, forward trading, if those are the kinds of numbers and those are the performance factors and that's his insights, how would you roll that forward into a adjusted trading plan and some guidance? What would your emotional response be? What would your rational response be? So what I think I'll do is I'll leave that as a thought experiment for you, and then invite you to do a short narrative of that and come up with your partnering advice to Jerome. So if you'd like to play along, let me suggest this. Send me an email entitled Jerome, Jerome, with your paragraph summary of advice or questions or insights. I'll bundle those up and then include that as part of the feedback that I send to them. And then that will help us practice some of that collaborative learning. So Martin and Rahul, I think you guys are both going to do the coaching. So let that be part of your initial practice to prepare some feedback, excuse me, to Jerome. So that's everything officially that I wanted to cover then. So let me go ahead and stop the recording there. And